and how I look at price cycles. It's a little bit strange, but it's effective. Hello traders, Kevin Pine with the Trading Buddy System. I just wanted to share a little bit about price cycles and how I look at price cycles. It's a little bit strange, but it's effective. Every market has its own price cycle. A price cycle is the amount of points or distance between support and resistance points, pivot points in the marketplace. And so if we can identify the average price cycle and identify areas of support and resistance and chop up these markets into areas that we can engage the market, almost like what supply and demand does, I'll show you just a general way of how I look at the markets and how to bring some order to the chaos. So we've got gold here on a daily basis, and I'm just going to take gold as an example. I love trading gold. I trade the micro golds and the micro ES mainly because of these price cycles. I like to scale in. I like to buy into support and sell into resistance because I'm trying to think more like a big commercial institutional trader where they have lots of orders to fill and they're going to be looking at these major levels on the daily, the weekly, etc. And so I'm gonna start on the daily and just start. I mean, obviously this is a long while ago, and for my day trading, I'm just gonna try to identify some of these major areas. So I've got this major resistance that turned into support, and then the leg of that big movement from July and August. And then it's come back down, and I like to find from this extreme high, extreme low from this area that I'm looking at, kind of a midpoint. And you can see there's a support right in here. There's lots of back and forth in here. So what about there is the midpoint. That's probably not that great right here. But if we measure this, we could measure it to see, you know, about what the distance is from the top to the middle to the bottom here, and that should be about pretty close. It doesn't have to be exact. There's no requirement for it to be exact. So what I'm going to do here is I'm going to find some other areas of support and resistance, and that's about half of that one, and this one is about half of this one. You see that? And we can do the same thing. We can take these areas and cut them in half, and you can see we've got support in there. We've got some resistance in here, about half, right? And then this pivot is actually half of this one, right? So we won't go that far, but this is the daily chart. What I'm going to do now is I'm going to go down to the hour chart. So with this hour chart, you can see the last 20 days or so. You know what? I want to go back a little bit farther. And let's just take the last 30 days. There we go. And you can see the pivot points that we placed on the daily chart. Look at this, folks. Look at this. The market on the 1 hour is finding these areas. So this is why it's helpful, because if you zoom in over here and you take a look at some of these lines that the market has found support and resistance at, I mean, this was back in, what day are we looking at here? August, beginning of August. Now we're in the middle of September, and the market has found pivot points at this old support became new resistance in the future. You know, about a week and a half later. And then this area of support became support over here. And this area support over here. Are you seeing that? That previous support and resistance, support here became resistance here and here. Isn't that interesting? So the reason that I have these lines drawn out is that there will be traders trading at these areas. You can see that it's close. It's not, doesn't have to be exact, but this zone of old support, old resistance, kind of made a head and shoulders there. You can see the shoulder there, a head, and then some shoulders. Didn't quite, and then had some sell down back to this one and found support. So the question is where is this market going? Well, using these price cycles, using the price cycles, I can say, well, let's cut this in half a bit. let's even cut this in half and see, well, what side do I want to be a buyer and what side do I want to be a seller? So let's get these lines, the line tool here. See, we've got about this to be the middle, 1870 to 1990, and then 1990 all the way up to 2090. So this is about the middle right in here, this line. So if we create this whole zone as kind of the middle, that means we're at the bottom. We're below the middle, the mid zone here. So this whole area right here is kind of the midpoint, the zone, and we can see that it kind of bounced back and forth in this area. Okay, we're below that, and looks like they found some selling into this midpoint. So what we want to do is we want to plan areas that we can be a buyer and areas that we can be a seller. So based off of the long-term trend, I'm going to look at this whole bottom area as potential buy area. Okay, and that's the longer term trend. If I'm holding on, 2 weeks, 2 months, any area down in here below this line, I can look to be a buyer and maybe scale into that. Now, if I'm shortening up my time frame a little bit, then I want to cut that in half just a tad, right? I want to cut this in half right here and be a buyer right there to the short term right in here. Now, if I'm trading even more short term, I can cut this portion, this top half in half, and say be a buyer in here, and then so on and so forth. So on a daily, if I allocate some daily risk, I can be a buyer into this. But really, to be a buyer, I don't want to be a buyer until we see it come down. So I want it to come down to this area, or this area, or even this area, right? Now, if I decide to scale into this slowly, I could probably scale into this, but because it's almost $100 worth, it's probably a little bit too risky. So depending on my play, now if I'm day trading this, all I need to do is zoom in. And then what I can do is I can split this up even more. I can cut this one in half, and I can cut this one in half, and I can even cut this in half. And I could say, all right, I want to be a buyer up into this area on my day trades. Be a buyer of that $20 range. Now, if it comes down to here, I'd much rather be a buyer in this area, because that's what happened here. It came down into this area, buying, and then it went into that upper range. And then as it came back down, it found support. So I'm using these price cycles as areas to engage the market. So wait to be a buyer here, be a buyer here. And obviously it found support right off of there. You could even break that one in half and say, okay, well, I'm going to be a buyer in this area. You can break it down as much as you want, depending on how quickly that you trade. But the idea is to bring some order to this chaotic market, because sometimes the markets seem pretty chaotic. But if you slow things down and look at these markets in terms of sections where there's probably some buying opportunities. Now, right here, it really wouldn't have worked out. You want to be a buyer at the bottom half, right? So find some support right here. Well, you get stopped out. It doesn't work all the time. There was just some huge sell-off right here, right? And being a buyer here worked for just a tad, but then it kept going down. And then finally, we found some support into these areas. Those areas were support areas previously. So it wasn't a surprise that it found support at one of these support resistance lines. Okay? So it's just one of the basic ways that I look at price action and price cycles. I'm just going to take a market, I'm going to look at the support resistance, and then I'm going to make my plan based off of that. So I'm going to say, well, this is my scenario one. I'm going to buy into this. If that's scenario one, I'm going to buy right now, but I'm going to start slow in case it goes against me, and then I'll buy here and I'll buy here. And if it breaks that, then I'll, depending on how much risk I have on my account, depending on how slow I started, I may need to cut it off and then wait to be a buyer at these lows. Then I don't have to hold on, and hope and pray that it comes back to my my break-even point. Okay, so that's scenario one. Scenario two is if it comes up into here, then I'll start selling. And then if it breaks this, I'll leave a little bit of allocation to sell into that in case it comes back down like it did here. I do that all the time. Sell into resistance. It breaks that resistance, but eventually that break is always tested. Well, not always. About 70% of the time, a breakout is tested back to the break. Okay, so that's scenario two as far as being a seller. So using these lines, I can pre-plan scenarios and different criteria that needs to be met in order for me to engage the market. In order for me to be a buyer, the market has to do this. In order for me to be a seller, the market should do this. And then I plan according to my risk. There's some additional steps that we'll talk about later, but that's the foundation of what I'm looking at. And it works with any market. Every market has its own price cycle. It has cycles that it moves through of buying and selling. There are areas of previous support that become new resistance. There are areas of previous resistance that become new support. As soon as we start identifying that and simplifying our trading, remember Leonardo da Vinci said simplicity is the ultimate sophistication. And I would argue that, simplifying your trading in this way, not having tons of stuff on your charts, you don't even need these fractals on there, you don't even need these lines. You just need a chart that you can see what's going on in the marketplace. There we go. You can see it's pretty easy to find some of these old support. We're right around that area of old support, and it's found resistance. Just some food for thought. I'll probably post some more videos regarding how this works. It works on any market. Like I said, I do it on the E-minis to find support at these areas and find price cycles that work very similarly. There's about the half. There's the halfway point there. There's the halfway point there-ish. We've got halfway points there, halfway points there, halfway points here. The market's going to engage and pivot where it's pivoted in the past. And remember, they're areas, zones, not just exact prices. And thinking that way and thinking in terms of scaling into your trades, managing your risk, it's going to be a lot easier to just trade with the flow of the market because you know where you're going to engage based on where the market's engaged, had buyers and seller battles. Now, just as a little tidbit too, you add volume profile and market profile to this, it gets even better. And you'll see at these points, it'll match up with some of the market profile and volume profile things, but we'll save that for another day. Thank you for watching. Thank you for supporting the Trading Buddy system. If you have if you have struggles and you have a good setup, a good strategy, but it's not working and you don't know why, I can help you. So visit tradingbuddysystem.com. Sign up for a complimentary session. Let's sit down. Let's talk about what's going on. I'm happy to help in any way that I can. Thanks for attending. Have a great day. Until next lesson.